Welcome to Eggs Invest podcast series, the podcast where we explore the dynamic world of real estate investing. We're diving into the various investment strategies available in the UK property market. Whether you're a seasoned investor or just getting started, there's something in today's discussion for everyone. So grab a cup of coffee, sit back, and let's get started. The UK real estate market is a fascinating landscape with high average yields, around 5.31% as of May 2020, making it an attractive destination for both domestic and international investors. Now, let's take a closer look at specific areas that are currently hot for investment. London, the capital city, stands out as a prime investment location. With an average property price of approximately $666,160 at the end of 2020, it boasts high demand for housing and rental properties. However, it's important to note that average rental yields here are around 2.83%, which is lower compared to other regions. Having covered the foundational aspects of ROI, let's discuss a crucial cost to consider when purchasing property: stamp duty. As a home buyer in the UK, whether you're a first-time buyer or a seasoned investor, you're required to pay stamp duty on properties priced over $125,000. However, there is a silver lining for first-time buyers, as they can avoid this tax on properties below $300,000. For properties priced between $125,001 and $250,000, a stamp duty rate of 2% is applied. This rate increases to 5% for properties priced from $250,001 to $925,000, and further increases to 10% and 12% for progressively higher property values. It's essential to note that these rates apply to your primary residence, and different rates apply if you're purchasing additional properties. Now let's shift our focus from costs to considerations regarding tax implications and due diligence in property investment. Tax analysis in property investment is crucial. If a property is acquired, stamp duty land tax, or SDLT, becomes payable based on the purchase price. This is where some investors opt to buy special purpose vehicles, SPVs, holding real estate to potentially save on SDLT. Then there's the thrill of property development. This strategy involves acquiring land or existing properties for new constructions or renovations. It carries higher risks, but also the potential for significant returns. Development projects require a good understanding of local zoning regulations, planning permissions, and construction logistics. And we can't forget about real estate investment trusts, REITs. These offer a way to invest in property without buying physical real estate. REITs provide exposure to diversified portfolios of properties and can be a more passive way to invest in real estate. While the opportunities are abundant, it's essential to acknowledge the challenges. The investment landscape comes with complex tax rules, fluctuating market demands, and management responsibilities that can become quite time-consuming. For example, buy-to-let properties can lead to potential void periods, especially if invested in less desirable areas, which could affect cash flow. Investors must also keep abreast of evolving legislation concerning landlord responsibilities and tenant rights. One unique approach worth exploring is purpose-built student accommodation, PBSA. With the UK seeing a surge in student numbers, investing in PBSA has grown remarkably. Reports indicate that over $5.77 billion was spent on student accommodation in 2020 alone. To illustrate these strategies in action, let's share some real-life experiences from property investors. Consider the story of Lewis, who found himself in a bidding war and ended up selling his property for $80,000 above market expectations. His success serves as a reminder that market timing and skilled negotiation can have a huge impact on profitability. Then there's Noah from Norfolk, who learned the value of negotiation. After setting a minimum sale price, his agent managed to negotiate an additional $15,000 from a motivated buyer. This highlights the significant difference an experienced agent can make in closing deals. Speed and security can also be crucial in sales, as demonstrated by Ava in Aberdeen, who needed a quick sale of a family property. Her agent helped secure an investor offer within 2 weeks, proving that aligning client priorities with market expertise can lead to favorable outcomes. And let's not overlook the personal journey of Lucas from London. An experienced investor, he attempted to sell his property independently, only to find that he sold it for less than anticipated. His experience underscores the inherent value of professional agents in navigating the market. To navigate the complexities of the real estate market effectively, active peer review and feedback are invaluable. By engaging with seasoned professionals and fellow investors, you can gain insights that help refine your investment proposals. Establishing a structured review process can involve assembling trusted advisors, property managers, legal experts, and financial analysts to evaluate your strategies. This collaborative approach ensures that you consider multiple perspectives and ultimately increase your chances of success. It's not just about acquiring properties. It's about continuing to learn, adapt, and incorporate feedback to enhance your investment strategies. As we wrap up today's episode, remember that the landscape of UK real estate investment is vast and ever-changing. Whether you're drawn to buy-to-let, buy-to-sell, or innovative strategies like PBSA, understanding market dynamics and tailoring your approach is key. Thank you for joining me on this journey through investment strategies in the UK real estate market. Don't forget to subscribe to Eggs Invest podcast series for more discussions on the latest trends in real estate and investing tips. Until next time, happy investing.